Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, May 31st, 2019 DecisionPoint show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. And welcome back, Dad. Good to have you back. We missed you last Friday for sure.
Thank you. Good to be here, especially on such an exciting day.
Oh, I know. There's so much going on. We're not gonna waste too much time with chit chat. We're going to cover what we normally cover on Fridays with our weekly review of the scoreboard indexes and the big four. But today we have a monthly review because it is the end of the month. So all of our indicators have gone final as far as signals. And we did have at least one change on a monthly signal. Weekly signal, I'm sorry. New intermediate term trend model neutral signals. We're seeing a lot of those today. So we'll talk about those. And then we're going to look at our S&P long-term trend model index that we have, that Carl has put together. And then we're going to look at some of those short-term climactic readings that we are seeing right now on our indicators. So let's go ahead and we'll start right off with the DecisionPoint scoreboards. Here are the new signals for the week. And actually, I could have added this one right here, I think. No, not that one. This one, May 23rd signal. We did get that intermediate term trend model neutral signal on the Dow, but yesterday the other three indexes followed suit with intermediate term trend model neutral signals. And then today, end of the week, we ended up getting a PMO sell signal on the weekly chart. So I'll be looking at that as well. Lots of neutrals. That means that the 20-day EMA has crossed below the 50-day EMA, but that crossover occurred above the 200-day EMA. So it is a neutral signal, not a sell signal. The DecisionPoint scoreboard, we ended up getting two more neutral signals on that, consumer discretionary and technology. These two areas are in that more aggressive part of the market, and these two groups you really don't want to see moving into these neutral signals. That certainly suggests more weakness ahead. And as long as we're seeing real estate, utilities, and staples, those three are your defensive sectors, and those are still on buy signals, but they're having some issues right now too. They are deteriorating.
The consumer staples is going to flip next week, as well as financials.
Mm-hmm.
Close call on financial. I was going to change it today, but for sure next week it's going to flip neutral. So
yeah, it's not looking good. As soon as you start seeing all that red appear on the sector scoreboard, that does give you a hint as to the weakness in the market, even in the short term when we start seeing those flip. But now that we're seeing even more, intermediate term is looking pretty bad now too. So let's go ahead and look at some of those charts. I'm going to start off with the price relative chart. This is showing us the major indexes here. Let me get my arrow back here. Hold on. Oh, this always happens to me when I'm in here. Oh, there it is. Okay, it is back. All right, there is that intermediate term trend model neutral signal on the S&P 500 right in there, you can see. What I'm pointing out right now, especially, are the fact that most of these indexes are underperforming the S&P 500. So they're actually falling. They're having an even worse time in this decline. You can see that even the large cap S&P 100 is starting to fade off now too, as far as price relative. Dow, mostly the same. It's been pretty much performing very similarly to the S&P 500 all month. As you can see, it's very flat.
Notice that the S&P 400 relative strength turned up today. That doesn't mean the index turned up, the prices turned up. It just means that it's not falling as fast as the S&P 500.
Exactly. So, that's the thing. Even if we're seeing a rise, like you could see right in here, and you were getting a little bit of a rise here out of the Dow during that period, that just means the performance is better or not as bad, I guess, in this case. All right, next up, we have the actual prices here using the ETFs. There's the SPY. You can see there's that intermediate term trend model neutral signal just went through. We do use the SPY for our timer digest signal reporting. So that did just come into effect today. Yesterday, we did get the S&P 500 neutral signal, just to clarify. As you can see, all of them are breaking down below these March lows. Very bad signal. This one as well, the Dow, there you go. We can see DIA is just also breaking down. You know, what I'm looking at on a lot of these price charts, and I think you probably would agree, Dad, is the fact that there are a lot of head and shoulders. Head, shoulder, shoulder. Not so much here, but you can see right here on the Dow, head, shoulder, shoulder. And on the Nasdaq, head, shoulder, shoulder. And of course, I've been watching it, and I will show you. I'm going to skip right ahead here so you can see the annotations I did on the head and shoulders for the S&P 500. So I thought we were going to stick around in this trading range. I thought we would just sort of work it out. But obviously we've dropped. Today we actually traded completely below the 200-day EMA and closed near the lows of the day. We're getting ready to hit some possible support right around that 2025 area, just below that. But if you look at the head and shoulders and you do the measurement, the minimum downside target is right around 2625, right in here. And I know a lot of other analysts are talking about 2600 as a possible stop. I think Larry Williams was on that train.
2700.
2700, that's right. Okay, let's go look at the global indexes. Sorry, I'm bouncing around a little bit here. There we go. So the global indexes, you know, the main thing is to see, you know, Germany started coming out of that bear market declining trend. It's now coming back to test that declining trend line. We've got Canada had managed to break above, and now it's falling back below. And then you can see that with France, UK, the other indexes, India is trying to make a push to get out of its bear market decline. So we'll have to see if it can do that. But I suspect with the US markets being weak, I wouldn't expect too much. All right, there's the Dow. There's a head and shoulders that I was looking at here. This is sort of a complex. I mean, I would call this whole thing kind of your left shoulder. It's just one of the ways you can look at them. The next area of support is right about 24,250, but if we did a measurement right here, that would probably put us down. I didn't count it up, 6, 7 from here, so right around 23.5 it looks like. Of course, sell signal, notice PMO is in negative territory, continuing to accelerate lower, declining tops on the OBV. There's really nothing here to give us a whole lot of hope at this point, I would say. All right, the weekly chart. This is the new intermediate term trend model PMO sell signal that we just got on the Dow. So I did want to point that out. The monthly chart, like I said, this has gone final. What I'm noticing on the monthly charts, and I will show you, is an acceleration. You know, we were decelerating. It looked like we might be able to come out from this sell signal, but now we're accelerating downward, and that is really not a good sign. You know, we've marked, I know I talked about this at the beginning of the year. We only have a handful, really, of these sell signals that have come in the past, I don't know, Dad, I can't remember how many years, 90 years or something. So when we get these, we pay close attention. And I was really looking at the fact we were starting to decelerate, looked like we were coming out, felt like we were probably out of the woods after this correction. Not so much. Nasdaq Daily, another one that's closed and traded below the 200-day EMA today. PMO is in negative territory. It's not as oversold as we have seen it, so it could certainly accommodate more downside. Come on. I need to use my arrows. All right. Weekly chart for the Nasdaq. You can see it is heading down. The PMO, it looks like it's ready to come down and cross, get a negative crossover, but we won't know until we start trading next week whether that signal will end up coming to fruition. But seeing these drops, you've got a drop now below the 43-week EMA, closed below it. Also not a good sign. Monthly chart for the Nasdaq. See, that signal came in all the way back in November, and now we're looking at a top below the signal line. Those are especially bearish in my opinion. All right, OEX daily chart. All righty, there you go. We had the breakdown below the 200-day EMA. Same sort of things going on here with that declining OBV. Weekly chart also getting close to a PMO sell signal. Monthly chart, again, we had it turning up on the OEX, and now it is accelerating downward after this really bad month of, well, almost a 7% decline for the month. All right, we looked at the daily chart for the S&P, again, the head and shoulders. One thing that we were talking about, Dab, before the show, I suppose we'll talk about a little more on at the end with the bonus, but you know, it was a bad day, but volume, we didn't really see climactic volume today.
No.
All right, PMO topping on the S&P weekly, but no sell signal as of yet. And again, the monthly chart, these tops below the signal line, and then a sharp acceleration downward. Certainly not.
I checked that today, and it actually topped last month.
Oh, it did. Okay.
Yeah, so it's extended this month.
Yes. Just accelerating further down.
Right.
All right. Ultra short-term indicators are climactic indicators. This is the breadth and volume in the VIX, which we look at. I'm going to take it into annotation because I want to mark what we had today as far as possible climactic activity. And I'm going to bring this up too, just so you can see. There's where we had our volume. It's not a climactic volume move here, but we're seeing these climactic readings today, but you know, not as climactic as we saw on Tuesday. VIX is not quite there. We're waiting for it to get down and puncture that Bollinger Band, so that tells me we can still move on down. We don't have bearish enough sentiment. We're going to talk about these indicators a little bit more later.
If we have time.
If we have time, exactly. All right. So here are the short-term indicators. Very ugly chart. I wrote about these on Wednesday. We want to see oscillation mostly above the zero line, and that's when you're in a bull market. That's what you're looking for. As soon as we start getting these really climactic readings and they're moving all over and we're getting them in the negative space, and in here you can see we actually oscillated, spent more time below the zero line. Well, right now, you know, we got back above the zero line, but we immediately have turned back down. I think the only positive that I would say about this chart is you can see that these are starting to decelerate just slightly, and they certainly are overbought. I mean, we've certainly hit that territory. Certainly could go a little bit further down. We've seen lower lows, but I think in the short term, this it's a good thing it's oversold. The problem is it still could move a little bit further down. So I would still look for a move to at least test that area at 27.25. That's what I'm looking at. Intermediate term indicators. There we are. Of course, we had the negative divergence of the tops, but right now we're back below the zero line. We are getting into oversold territory, but again, you can see we've had moments in time where we've been below that, and you know, even when we had the big decline here. So we are somewhat oversold, but in the situation we're in right now, I would look for it to move even further down. All right, I'm going to move back to you now, Dad, because you're up with the big four.
Okay. UUP, dollar index, has been rising in a rising wedge within a rising wedge, and popped back down today. Let's move to the weekly to show you why. It came right up against overhead resistance based on the high in 2017. Let's take a look at the monthly. Okay, you notice that goes back, I mentioned it last week, that overhead resistance goes back to 2008, 2009. And so far we've got a rising PMO, but that I think that resistance is going to stop it at this point because it's pretty long term.
Mm-hmm. All righty.
Gold had a heck of a week, and a heck of a day.
Yes.
We actually have a triple bottom there across April and May.
Oh, yeah.
And, a failed attempt to get out of the falling wedge earlier this month, but now it's made it for sure. And I think I think this is getting ready to move higher, but it is gold.
Yes. All righty.
Weekly also looking very good. We've got the PMO turning up, and the price breaking out of that falling wedge, which is also a pennant formation. So I'm looking to possibly challenge the overhead resistance at 1375.
Mm-hmm.
Let's see the monthly. Again, we've got a very long trading range. It's talked about it and be talking about it in the weekly commentary, but we have an example here of parabolic up move, and it did collapse finally, but it parabolics, we often expect them to move back to the base, which on gold in this case would have been about 300. But in other times, we have almost a 50% pullback from the top, and then it moves into what Ken Gamage used to call a high-level consolidation, and we ultimately will expect to break out of that.
All righty.
Boy, this is yeah. Some weird price action in Wednesday and Thursday, but it was down. When I looked at the TV earlier, it was like it's down about $3.50. It's a huge move. We got the sell signal on it yesterday, I think it was, and just definitely looking negative. I wouldn't look for anything happy to happen until it hits that low down in December. Yeah, December low, which is about $42 a barrel for crude.
Mm-hmm.
Pretty much the same story on the weekly chart. We've got PMO's top, and just totally a negative picture.
Yeah, it's ugly.
And notice that the monthly PMO turned down below the zero line again. And I'm looking for that support to hold, but you kind of wonder when you look how it's been hugging the bottom of that trading range.
Yeah. Bonds had a good day.
Yes. And well, there you go. I think there's there's a big move back into bonds, and it's pretty frantic. Somehow I didn't get it on this chart, but if you look, start at the March low there, and then you go across the April bottom, and then swooshing up. We've got a parabolic going on here. Let's not try to do it.
Okay.
Because it's a little frustrating.
Yeah.
But it's a parabolic up move, and that's ultimately should contain itself. It was getting pretty vertical here. Let's look at the weekly. See, there's a overhead resistance at the 2016 top, and again, that's parabolic. It could go somewhat above that, but I think when it's going this straight, you just need to watch out. It's getting too much of a frenzy with the bonds.
Yeah, I'd have a trailing stop for sure.
And looking at the long-term chart, it's like a 37-year uptrend. And I thought we were going to bounce or drop down out of that this year. But instead, we're going back. We're over halfway up to the top of the trading range again. So that would, in my mind, the top of the range would probably be the end of this move, but that could carry on another couple of months. I'm not looking for a parabolic at this point, like we had earlier there.
PMO, did that come in this week or last?
The crossover, I'm not sure.
Yeah, it's a monthly one, so I'll have to look at that.
Okay, and then I put the TLT, the ETF chart up just to emphasize. We've got the overhead resistance there.
All right. You know what? I'm going to try and make this a little wider. I'm sorry, guys. Go ahead. You can start talking about it, though. There we go.
All right. We've got the double top still working. You can see I've circled the change of signal to neutral there. And PMO is confirming this down moves. The OBV is confirming. Now, SPY volume is a little short today, but so is the total volume for the S&P. I use a 250-day exponential average for the volume, the total volume. To me, it gives it just gets a better signal of where the if you're short, like I said, right now it's showing that we're short on volume today, and finally we've got the log scale inverted VIX with Bollinger Bands, and I think next week we'll probably hit the bottom band, and at that point you've got to kind of be alert because it can be a signal that price is about to reverse. Although you notice in May how we had several penetrations and things just got worse. We did get a bounce off of the last green arrow there, but again, the 20 EMA, or not EMA, it's a simple moving average of the VIX, served as a resistance level, and now it's headed back down.
All righty. And then, yes, let's talk a little bit more about what's going on here.
Right. I just wanted to take a peek at the long-term trend percent buy, and it's just continued to get worse. I haven't updated it as of today. And I add a panel with the intermediate term trend model buy signals as a percent. Notice it's down below 40 says that doesn't seem right to me. Oh, I know. I'm looking at. Anyway, no. Anyway, it's very deeply. It's getting very deep into the negative, out of the positive zone, and something. This is one that I'm also going to start covering more regularly.
Yeah, I might try and help with getting some more back data too. So that would.
Yes.
We were talking about it and we thought, oh my gosh, I can't believe we didn't think this up these indexes before.
Yeah.
They're so useful.
Do we have one more chart there, don't we?
I think so. There it is.
Yeah.
I'm going to make it wider. I'm sorry. I want people to be able to see it a little bit better. There we go.
So the three actual Climax indicators on here is net breadth, net volume, and total volume. None of I guess you say net breadth was somewhat climactic. I don't see this as a climax day, especially with the short volume. The new lows are starting to expand as we get farther away from the recent price top, but it's still not showing any climax, and we wouldn't expect it to until the price gets further down.
And there's that intermediate term trend model neutral signal right there.
Right.
So I haven't used the longer term EMA before on the volume. I think I might have to add that because mine, I think it's only a 50, and it doesn't really give you the, especially on a climactic chart, it doesn't really give you the right sense of.
Yeah, when you put up volume, it defaults to a 50 moving average, and I've liked the 250 for a very long time. Notice the splats on top of those volume spikes. That just marks the days that we have end of quarter options expiration. Those are always high volume days.
Yes, and so you have to keep that in mind.
Right. You don't want to think of that volume as being something special in terms of an internal signal. It's not.
Right. Well, we have about 1 minute. So, what are you looking at? What are your opinions right now in general on the markets? Are you looking for short-term continued weakness, bullish, bearish?
Yeah, I'm bearish for next week. I can see where we could get a bounce, but there's just too much in flux at this point, and definitely keep an eye on that volatility index, lower Bollinger Band.
Yes.
I think that's something that that probably tells you we're getting close to something.
All right. Well, I want to thank everybody for being here today, especially you, Dad. Remember to complete that survey as you exit. And a quick reminder, DecisionPoint airs Fridays at 4:30 p.m. Eastern. Have a great weekend.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at Seattle Money.